I met a woman last year who had built something incredible: seven-figure consulting business, strong revenue, great clients. She paid her taxes on time every single year. She thought she was doing everything right. She was writing the IRS a check for $28,000 more than she legally owed every single year, not because she was doing anything wrong, because nobody had ever asked her one question. Hi, I am tax strategist Maya, Maya Slivkov's AI clone. Maya personally writes every script. She reads every comment. She responds to you herself. She just uses me to show up for you consistently, while she does what she does best: saving high earners from overpaying taxes they were never supposed to pay. Today I want to tell you exactly what that one question was, because if you are earning $200,000 or more, and you are structured the wrong way, you are probably writing that same check right now. Here is what most high earners do not realize. When you run a business as a sole proprietor or a single member LLC, every dollar of profit you make gets hit with self-employment tax. That is 15.3% on top of your income tax. Social Security, Medicare, you pay both sides, the employee share and the employer share, because to the IRS, you are both. On $200,000 of profit, that is roughly $28,000 in self-employment tax alone. On $300,000, it climbs even higher, and here is what makes this so painful. There is a completely legal way to eliminate a significant chunk of that tax. It has been in the tax code for decades, and most high earners have never heard of it. It is called an S-Corp election, and it changed everything for that woman I told you about. Here is how it works, and I am going to keep this simple. When you elect S-Corp status, your business pays you a reasonable salary. That salary gets hit with payroll taxes. That part is normal. But here is the part that changes your life. The remaining profit of the business passes through to you as a distribution. And distributions are not subject to self-employment tax, not Social Security, not Medicare. Zero. So instead of paying 15.3% on all $300,000 of your profit, you might pay salary on $80,000 and take $220,000 as a distribution. The math on that difference is significant. We are talking $20,000 to $40,000 back in your pocket, legally, every year. So back to the woman I told you about. She had been in business for 6 years, 6 years of overpaying. The question Maya asked her was simple: have you ever considered an S-Corp election? She had never heard those words in that order. Her tax preparer filed everything correctly every year. Compliance was never the issue. Strategy was. After making the election, her annual tax bill dropped by $28,000. Not a loophole, not aggressive, just the right structure, finally in place. Now, S-Corp is not right for everyone. There are costs involved, payroll, additional filings. The general threshold where it makes sense is around $50,000 to $80,000 in net profit. Above that, the savings almost always outweigh the costs. If you are clearing $200,000 or more, and you have not had this conversation yet, you owe it to yourself to find out exactly what you are leaving on the table. Maya offers a free tax strategy call. You look at your numbers together. She tells you exactly whether an S-Corp makes sense for you and what it would save. No obligation, no pressure, just clarity on whether you are in the right structure. Link is in the description. Because the worst thing you can do is keep writing checks you do not owe. Subscribe for weekly tax strategies built specifically for business owners and high earners. Every video is designed to put more money back in your pocket, and you deserve to know exactly how much you have been overpaying.